Welcome to Regulatory Ramblings. Our podcast today is brought to you by the University of Hong Kong's RegTech Lab, the HKU Standard Chartered Foundation Fintech Academy, the Asia Global Institute, and HKU edX's Professional Certificate in Fintech, with support from the university's Faculty of Law. I'm your host, Ajay Shandasani. Our topic today is Fintech, evolution, inclusion, and where are things going? Our guest is US-based Theodora Lau. She's Hong Kong born and bred, and is the founder of Unconventional Ventures. Her firm's mission is developing and growing an ecosystem of financial institutions, corporations, startups, entrepreneurs, venture capitalists, accelerators, all with the aim of making banking better, as well as to meet the often unmet needs of consumers, including older adults and women and minorities. As she sees it, Theodora's mission is to connect founders with funders, with a specific focus on underrepresented entrepreneurs. As part of her work, she often mentors and advises startups in both financial services, healthcare, and the caregiving space. She's an advisor for B21 Ventures, focusing on entrepreneurs, disrupting finance and health with artificial intelligence. She's also been called by the American Banker as, quote, one of the most influential women in fintech, and is one of the few global experts providing authoritative insights on both the US vis-a-vis developments in Asia. Besides being a best-selling author, Theo is an accomplished technologist and is much sought after for her unique insights on the success of super apps in Asia, the evolution of AI, and, as we shall discuss today, the disparity in digital adoption between regions. Simply put, Theo provides an in-depth look at the evolving fintech landscape and regulatory challenges that entails. She is also a public speaker, writer, advisor, and seeks to spark innovation in the public and private sectors for the benefits of the forgotten demographics and to create a more inclusive society. She regularly speaks on the topics of AI, gender equity, fintech, inclusion, and longevity, and is a guest contributor for various top industry events, publications, and podcasts, including Fintech Futures, The American Banker, BBC, the Journal of Digital Banking, Harvard Business Review, Nikkei Asia, MIT Tech Review, Money 2020, Finovate, Rise, Fintech Week Hong Kong, Breaking Banks, Irish Tech News, and the Forbes Technology Council. Theo is also the co-author of Beyond Good, How Technology is Leading a Purpose-Driven Business Revolution. And she also penned The Metaverse Economy, a book that I have read multiple times and I think is well worth getting. It's a very good read. She's also the host of One Vision, a podcast on innovation, fintech, and runs a weekly LinkedIn newsletter called Fintech Pros on emerging technologies, such as voice and AI. She also delves into inclusion, fintech innovation, and using technology for good. Her monthly column on Fintech Futures explores the intersection between fintech and humanity. And yes, she is ever the techie with a penchant for business, holding a Bachelor of Science degree in chemical engineering from Rensselaer Polytechnic Institute in upstate New York, and a Master of Science degree in project management from the George Washington University in Washington, D.C. And with that, Theo, thank you so much for joining us.
Oh my goodness. Thank you so much for inviting me, and I look forward to chatting with you. And appreciate the kind intro. That was long. Quite a mouthful.
Quite. You are ever so accomplished. I mean, I think it almost we often like to kick off our programs by asking guests to tell us a little bit about themselves, but I think we've got an essential roadmap so far. But I mean, I guess that tells us a little bit about what you've done, where you've been, but I guess we're always keen to tease out each guest's motivations for how they got to where they were? What compelled them to tread that path that few dare to venture? Right? I mean, with your credentials, you could have gotten a job in the corporate sphere and the tech world and been set for life and not look back. But you've given back quite a bit. So with that in mind, with your your ethos for giving back, your desire to mentor and all of that. I mean, tell us a little bit about yourself and where you're from, and your upbringing and your background, and where you see yourself going. I mean, because you're more than an entrepreneur. Most entrepreneurs don't give back as much as you have.
Oh, thank you. I think we all need to do more. Gosh, the world need more. But real quick, I think what's been interesting, I chuckled a little bit when you said, born and bred in Hong Kong. That literally was where I spent 18 years of my life. I think looking back at how I end up where I am, I did spend almost 20 years in corporate life. So I did that. I checked that part. I checked the part where, if you're Asian, there are only so many professions you can take. And I checked that box too. Um, I think a lot of what I've been drawn to, where I spent the most of my energy, comes from my family, my upbringing. I was born in Hong Kong, and that's where I grew up. And a lot of what I do was influenced particularly by my mom. She grew up in a huge family, and her family were refugees and they escaped the war and they settled in Hong Kong. And she's third in the family. So this is a little bit of a story, but I think it'll explain a little bit why I'm doing what I'm doing. And she did really, really well in school. Her family was extremely poor, so they got by with the generosity of neighbors, people around them, the Catholic Church, and the government, and what have you. And when she graduated secondary school in Hong Kong, she was able to get a scholarship to continue, completely paid for, free. And at that time, you're thinking back in the 60s, right? That's a huge deal. But she couldn't do it. She couldn't take it, not because she cannot do it, but because financially, being third in the family with 6 children, she had to come out and work to earn money and to support the younger siblings. So did my 2 aunts who were older than her. Such was her story. And growing up, she often instilled in me, when we see people where they are with their career trajectory, don't assume, right? Don't assume they're doing something because that's all they're capable of, or assume they're doing something because that's what they want to. There's always a backstory. And that was my mom's backstory. Now, with her giving back to her family, supporting the rest of her younger siblings, my youngest aunt, 6th in the family, was able to come to the States, and she did her undergrad in Harvard. She did her master's degree, PhD, and all of that, and she became very accomplished scientist researching Alzheimer's. And my uncle, who's 5th in the family, he also was able to come to the States and did his bachelor degree and all of that. So I guess for her, it was a sacrifice that was worth it. But it was because of that. That's why she always said, we need to give back because there are always people that need help. And that was partially how she influenced my upbringing.
That's truly an incredible story, and certainly it seems like your family have realized, attained the American dream, the much vaunted American dream, and that it resonated with me because yeah, I mean it's when someone hits it big, my sense of the Chinese community is not that different, but certainly in the Indian community, the tendency is to say, "Oh, really? Well, I knew him back in the day when he wasn't doing much of anything."
Yeah.
You know,
Yeah.
and I don't know that sniping, that causticness, that that snarkiness that you see in Asian cultures when others succeed. I mean, it almost goes back to that Gore Vidal quote of every time I hear a friend is doing well, I die a little.
Oh God.
Yeah.
Well, there's a little bit of that, but there's I think in our culture, right? And I'm sure that would resonate with you. It's about if you are able to do something, then the next question that will come from people is, why aren't you doing more? Right? You always expect to do more. And so when she had to take a step back from what she's able to do, and she always says, she's like, I look at all my friends who, grew up with her and all of them who were able to continue to universities and they have a great career. And she's like, part of me, it killed her a little bit. Right. And she's very upfront about it. But she's like, but if it wasn't because of that, she wouldn't have become a teacher and she wouldn't have met my dad. And both of my parents are educators. I came from a family of educators. All of my aunts are educators. And so, you know, for her, it's like, well, you thought you lost something, but in the end, you gained something back, right? You got a family. So it's how life works sometimes. And the other thing, and I remember I told someone this story when I was on stage recently. Um, when we look at inequality, right, in our society, it doesn't matter if you're in Asia, you're in the US, and what have you, you often have people who can make it, right? People that have access to a lot, and then you have those who don't. And oftentimes, people's assumption will be, well, if you're poor, it's because you're lazy. Or if you're poor health is because you're not taking care of yourself. As a matter of fact, I actually had someone who told me to my face a couple of months ago that said, I don't think our healthcare system should support people who are sick and, frail and, of poor health because we should just leave them to rot so we don't have to bear the burden. Things like that, it kills you because that is not the truth. I often tell people no one choose to be poor. It would be silly to say, I wake up one day, I'm like, you know what? My goal is I'll just be dirt poor. No one does that. There's always something that happens. Life happens. We often say, talent is everywhere, opportunities are not. I know that sounds very cliche, but it is real, right? And so for those of us who are able to have a little bit, then why can't we share? Because, a rising tide lifts all boats. And that's a hard thing to it should not be a hard concept to understand, but unfortunately, it seems like it is.
I think people often underestimate how much, like, if you're in an ideal position in life, if you're successful, we underestimate how much of our advantageous situation, how much of our success is predicated on the hard work and successes of those that came before us. Now,
Absolutely.
the quote of "If I can see further, it's because I stand on the shoulders of giants." So there is certainly, and I think both our cultures, the emphasis on gratitude for what earlier generations have done for us. It's waning sometimes, but I think that sense of gratitude still prevails. And to your mother's point about don't judge where people are today based on what they're doing right now, because things can happen to put them on a very different trajectory. I saw that once. I mean, I the law school I went to, there was a young man from India, and he was, of humble means, but they managed to scrape together the money to pay for his LLM in intellectual property law, and he was there studying, and the aim was to get a job in the U.S. Or return back to India, and he would have been content with that, but something happened. Certain, if I want to put it this way, certain stars aligned, certain events arose that enabled him to get the funding to go to Harvard Law School to do his JD, and the attainment of that put him on an incredibly different trajectory in life. That he was able to, rise up in this world, make something of himself, uh, help his family. I mean, it just, yeah, never judge. I would say someone on the basis of where they're at right now and what you see before you right now. Um, to shift gears, you've been there from the beginning of the age of the modern age of digital finance. I mean, I guess what changes have you seen, and what's impressed you the most?
I feel ancient. The way you put that, that's
No, I
hilarious.
mean, hey, the kids of the '80s or are now old, right? I mean, we're Generation X.
It's
Yeah,
perfect. I'm
yeah.
actually from the 70s, so I celebrated my 50 last year. Um,
Congratulations.
the
Yeah,
Thank you. Well, the great thing is I often get reminded by my children that I'm half a century old. And I
yeah,
often tell them, you know what? You have another 50 years you need to deal with me. So
yeah.
congratulations.
40 is the old age of youth. 50 is the youth of old age. So the saying goes.
It's all good. It's all good. I think it's interesting, right? If we look back in time, I don't know how far back you want to go back to, but I I think back in, let's say, my experience when I first moved to the US in the early 90s to New York. And then subsequently I came to DC, and I remember I had to open a different bank account when I moved. Those were the days when you move across state line in the US, you have to open a new account. And then came internet banking. I remember the sound of the modem, and I was absolutely excited. I'm like, oh, now you're connected to the bigger world. And oh, wait, you can move money, right, online, instead of having to go to the bank all the time. And then came mobile banking, thanks to iPhone and everything else. The iPhone basically changed everything we know about how we live and how we work and how we consume services. I think that was truly the first moment, right, when you can actually take your phone. You can do things that you want to whenever you want to, wherever you want to. You're not tied to the home. That was the first thing that I'm like, wow, this is amazing. And then you can do remote deposit capture. I know we still love checks in here. And the ability to actually deposit a check via your phone and take a picture instead of having to go to the bank, that was nice. And then comes the apps, right? The fintech apps, the roundup, the ability to save and round up a little bit here and there, ability to invest via the little apps that you have that you're no longer tied to the big brands. That was amazing. So the freedom, the ability to have the technology become available to more people at their fingertips. And then obviously the super app that, Asia had, gosh, what, over 10 years ago now. So all of that has been amazing. And I think they all tie around a theme, which is getting the technology and the services available to more people in different corners of the world in an easier and more affordable fashion.
Very succinctly put. Now, you're about a half generation ahead of me, I'd say. So I think we've probably encountered and observed much of the same. But as you've seen fintech evolve over the course of your career, what would you say if you take a step back and look at it from a more macro level?
Mhm.
What would you say have been its greatest successes in terms of benefits to the financial system, efficiencies generated, stuff like that, uh, more consumer functionality, and what have been the benefits to society overall?
It's an interesting question because if you think about, we've been asking ourselves quite a bit the last few years, what exactly is fintech, right? Succinctly put, when I actually did a afternoon presentation with about 100 kids in Hong Kong in a high school when I was in Hong Kong this past summer. And I asked them this. I said, guys, what do you think? What is fintech, right? How would you define fintech? And they said, well, the ability to do your finance digitally via phone or something. That's what they call fintech. And so if you use that as a definition, which I think it's a good one, then everything is fintech because we don't do anything without doing something digitally nowadays. So that's one way to look at it. It's basically just getting access to more people, as I said earlier. But the other thing, I think, if you do a narrower sense of what is fintech, so let's say the past 2 decades, right? The PayPal's, the Stripes, and all of those. I think what they've done is they have been able to push the banks, the incumbents, to rethink what they do. A lot of the features that the fintechs come up with, right? So like, more access to investing, getting paid earlier. We call it the earned wage access in the US. Or having like a central dashboard so showing all of your accounts and all of those. A lot of those things were started by fintechs, but they could have easily been done by banks, but they were not. So I think one big thing, which I appreciate a lot of the fintechs have done, is they have pushed the banks to rethink, what do my customers want? What do consumers want? And how can I get it there? How do I help them lower the cost of money movement, for example, right? So that's one great achievement, if you want to put it that way, is remittance. It's still not completely solved, but it's gotten a little cheaper, a little easier. So if I were to look back and say, okay, over the last 2 decades, what is a great thing that fintechs have done is to push the boundaries a little bit more.
Yet when we look at the US, people are still writing checks.
I knew you're gonna ask
Do,
that.
do you envisage that ever changing?
That is a loaded question. Um,
Because it's heavily cultural too. So,
mm, yes and no. I'll give you a story. So,
well, I mean, it's so deeply rooted. I mean, I mean, look, I left Hong Kong in '95 for
yeah.
college, and
Mm-hmm.
I was, I mean, I did everything in my power not to laugh when I saw people pulling out their checkbooks to to pay for pizza.
They don't do that anymore. So that's the good thing. But I think COVID has changed the habit a great deal. Would you believe it if I say in the past few years, the quickest uptick of adoption of PayPal are actually people older than 50, right? So I think the pandemic has changed the habit of people a lot, but I still write checks. And it's not because I want to, it's because my bank does not support anything else otherwise. And I think that is the challenge. So when I was in New York, I have a bank with a big bank.
So it's
When
so
I
it's
came,
it's an institutional
it's
constraint.
an institution constraint. It's tech debt. So when I came to DC, I had to open another account, right, with the same bank. In the last 20 some years, those two accounts had not reconciled, even though they're both quote unquote belong to the same bank, because the core and the back don't talk to each other. When I opened my business account, when I started my business a few years ago, almost 8 years now, I opened a small business account under the same bank, thinking, apparently wrongly, that it will help me move money easier, right? So now I have 3 accounts with the same bank, 3 logins, 3 ATM cards, 3 different sets of accounts. If you ask that bank, they might think it's actually 3 people, but it's not. It's 1 person. To move money from my small business account to my personal account, the one in New York, I had to write myself a check because I cannot move money online unless I do a wire transfer. I'm not going to do a wire transfer between my 2 accounts. That's crazy. So the only way until now, you're going to laugh, until Apple came up with a savings account, until then, the only way of moving money is writing myself a check, remote deposit, and voila. Now with Apple, what I've done, which is fascinating, is I can move money digitally within seconds from my small business account to the Apple account. And then I moved the money from the Apple savings account to my personal account. That's the only way I can get around writing a check or going to a bank. So, we laugh at consumers, people writing checks, but if we look deeper, yes, there are people who still prefer checks, but I would challenge that. A lot of people still write checks because they don't have any other way. And I'll give you another fact. Treasury, the Department of Treasury, you know how many checks they issued last year? 45 million. Okay. So there's that too. If our government keeps writing checks and then our institutions are not updated to keep up with it, we're going to be stuck with checks forever.
Certainly, it says something for how government needs to evolve. But I mean, in a global world, people are inevitably going to compare. I mean, why can I do this here and not there? Why are things so much better here and not there? Why is the U.S. so far behind places like Japan and China and Hong Kong and Singapore in terms of digital payment options?
Oh, I ask myself that all the time. I spend 2 months in Asia every year, and I'm like, gosh, if only we could do this. I think it's a couple of things, right? So we have an existing infrastructure. It's been here for a while. Our market is mature. Everything is mature. It's not perfect, but it's working to the extent it does. Status quo is a nice thing and is very comfortable. It's not perfect, but people are like, well, you know what? But it works, right? We find workarounds to make it work. And I think the funniest one actually is I hear people tell me they're like, I don't want to be the first CEO to upgrade my core system and be the first one to just basically crap on it and lose money. That's the other part, is because it is really costly to upgrade, right? So there are institutions that are more digital. There are institutions that are more digital first, and there are ones that built a parallel stack. But by and large, I think we are slowly, slowly, slowly getting there. We're not quite there yet. We'll be one day, I think.
When you look at the jurisdictions in Asia, they're all at different levels of development, economically, financially, and certainly in terms of the regulatory apparatus and even just technical sophistication. Broadly speaking, I agree. Asia has a very rich fintech ecosystem, and that ecosystem development has largely been driven by large big techs. Certainly in the case of China, WeChat, Tencent, the Japanese conglomerates. And to your point about CEOs not wanting to be the first to do a massive overhaul of their systems. I mean, yeah, certain banks come to mind, like HSBC, but HSBC has invested a fair amount of money in terms of coming up to speed. And rather than, because what we see as consumers is one thing, what the wiring behind the scene, the old men tinkering behind the scenes with antiquated computer programming languages. I mean, that they have people in their 60s and 70s working for them behind the scenes, keeping things together because a lot of the young people don't know these programming languages. But okay, but when it comes to the rollout of new technologies, some of which are sorely needed in the financial world, bankers and IT people have often told me over the years that even when times are good, even when times are prosperous, it's hard to get their superiors to shell out the funds for upgrades. The rationale is, which is rather nearsighted and cost conscious, but the rationale is if it isn't broke, don't fix it. And our friend Mashir Syed, who a mutual friend who's been on the show before, has even pointed out technology is not the challenge. It's often the adoption by local regulators or the enterprises themselves that's the challenge, and also the regulations that enable them. That can pose an obstacle. But what do you think?
No, all of the above. it. I mean, look. I think it's fascinating. It's a fascinating question that does not have a straight answer. Um, if we look at, for example, just payments, right? Just pick one piece. We look at payments in Asia. like you say, there are a lot of different jurisdictions, many 70-something countries, right? Different cultures, different language, different government, different maturity, if you will, and different digital adoption. But I think one thing in common is that people do move around quite a bit. And so when you have that, you need to find ways that will enable money movement to go with people movement. So one of the most fascinating thing I've loved to see the last 2 years, has it been, or 1 year? I can't remember how long it's been. Um, the likes of Alipay Plus, right? Where you have one wallet, but you can still use your local wallet when you travel and you pay with that local currency. And it enables the merchants from the other country to reach out to the travelers, et cetera, just to enable not just cross-border movement, but also enable marketing, et cetera. That is fascinating to watch. I remember I was in Japan a couple of months ago and I saw all these logos. I'm like, oh my God, that's crazy. But when you have the need, people will find ways, right, to bring the ecosystems together. We come back to the US, it's one country, but 50 states, right? And you talked about regulation, you talked about, jurisdiction. It feels like oftentimes 50 countries. There are many different state rules, even within financial services, right? You have the SEC, you have the CFTC, you have the FinCEN, you have the OCC, you have FDIC, you have FTC, you have all of these different bodies that are in charge with different pieces and parts of the ecosystem. It takes a while to get things reconciled. It takes a while to get people to agree on exactly what we need to do. We have so many banks, so many voices, so many states, and everyone wants to do something different. I think that is one big challenge, right? Tech is the easy part. That's the funny thing, right? Because tech, in the end of the day, is coding. Coding is the easy part. Is getting people to agree on what to code and what you want to see coming out from it and how fast you want to move. That's the problem. It's always the people, unfortunately. People and culture. And that's the hard part to solve.
It seems that the inherent gridlock certainly in the American system is designed to slow, if not impede, the implementation of innovative solutions. But on the point about the multitude of regulators, does the number of regulators in the U.S., do you think, impact its ability to roll out more digital payment options?
I think that and just the multitude of how
The
many.
jurisdictional turf war. Yeah.
Yeah, right. So there's politics involved. There's lobbying involved, right? So now you have the question around the big banks, and then you have the smaller community banks, and then the credit unions and the fintechs. When you have so many cooks in the kitchen, and when you have so many different chefs in the kitchen, that basically it's hard to do. You can see it around, for example, cryptocurrency, right? We were like, well, no, SEC is, oversees something, but, they don't really oversee something else. Some are security, some are not. It's a hodgepodge of things. And it does make it hard. But I wouldn't say broad stroke, it impedes innovation. I think there are a lot of pockets of people who want to do something different, who wants to push the envelope. And it does not necessarily come from within incumbent banks. I think that's the interesting part. You look at the tech companies, you look at the startups, right? And you look at what we are implementing in financial services industry. It is highly regulated, right? So I have the small institutions, their C-level executive would often comment, well, we are a little bit worried about moving ahead with some of the AI solutions because we don't quite know exactly what we are allowed to do and what we're not allowed to do because there's lack of clarity from a regulation perspective. We don't know if tomorrow we might, get fined. Now, if you're JPMs of the world or, BFA, if you get fined, it's a rounding error. But if you're a small community bank or credit union, you get fined. That's huge. And so there's that part too. So it's not, yes, there are a lot of executives who are scared of moving forward because it's complex and it's costly. Then there are those who really wanted to change, but regulation does impede on how fast they move and where they move. And so when you see the changes that's been happening the past few years, you see them happening outside of traditional banking system. You see it happening with Apple. You see the Googles, you see the Amazons, all of the big techs who are trying to push the envelope because they are not banks per se. They just offer different types of banking services. So I think that's where the innovation is coming and is fascinating to watch.
Absolutely. And indeed, a recurring theme on this show is, and this goes back to something I heard years ago to ACAM's money laundering event in Dubai. A banker from Abu Dhabi pointed out that he said bankers have gotten fat, lazy, and complacent, and that people need banking services. They don't necessarily need banks. And this is before the whole debate about cryptocurrency, which, opens up a whole other can of worms. But I mean, okay, so acknowledging the regulatory landscape the way it is and the challenges that poses, acknowledging this is the state of technology as it is now. How long before the US and Europe embrace full digital banking?
That's a loaded question. What do you mean by digital banking? Because a lot of that is predicated towards people actually having digital access, right? And the interesting thing is we're not as connected digitally as we should be, right? There are a lot of rural areas that have no access to internet. That was a little crazy. Um, or those who don't have affordable access. That's the other problem, right? So just having access is only one thing. Having affordable access is the other thing. And then having the digital literacy to know what you need to use, that's the third thing. So until we solve all of those, I think there will still be gaps and challenges towards actually putting everything digital. And this is a fascinating question by itself too, because I was having a chat with a friend of mine earlier today, and we're talking about, is everything going to be digital? Because now you see banks opening branches, right? JPM is opening branches. Some of the credit unions are actually opening more branches. I think there's still a lot of value that we will need branches for. How we're using the branches will be different, right? Like, so let's hope that eventually I wouldn't have to go to the bank to deposit a check, or do a lot of those mundane things. But, what if there are financial advice or things that I actually want to talk to someone? Or, other things that we might use a bank branch and a person for. Small business, for example, there are quite a few things that we actually still need to talk to bankers. So I think there will still be branches. I don't think we'll be 100% digital. That was a fascinating study I just saw last week that said Gen Z, of all people, Gen Z actually, 40 something percent of them, they go to bank. They still do, which is interesting. They actually use the bank more than Gen X's do, in the US at least. So I feel like the pendulum is still swinging. Um, I don't know exactly where we'll land. I actually don't think we'll go entirely branchless or cashless. There will be less banks for sure. We have way too many. There will be less branches in some places, but I think there will still be a need for in person.
I think a bigger issue is, you're right, it's that of financial inclusion. And as far as Generation Z going to the bank, going directly to branches, I mean, that's akin to my 87-year-old aunt who likes to go to the bank once a month, get her cash for the month, and meet with her personal banker. And older people like that they like to be served. And I guess it comes down, this also implicates the other issue of why has there not been as much technological uptake by the elderly? That seems to be one of the biggest challenges. And then you look at the OECD lifespans of over 80, certainly in Hong Kong. Um, that personally, and this, I don't mean to sound callous, but as I've said before, I think it's gonna be a generational shift, and once a certain critical mass of the old timers pass on, then you'll start to see a cascade effect. And then banks will say, okay, I don't care, even though previously you may even have been willing to pay $50 a month for a printed statement to be sent to you. We are telling you right now that is a service it's not worth our while to provide anymore. You want to print out, we'll come to our branch, or do digital banking and assign. You're not tech savvy, fine. Assign someone to handle your affairs who is, and yes, branches will always be there because, as in a sense, public utilities, that is their agreement with the state. They like to maintain that they have to maintain a certain number of branches, even though they're not happy about it. But I guess again, come back to the topic of financial inclusion. How can fintech then engender or aid the broader goal of financial inclusion? I mean, do and sometimes I feel people in the tech will promise more than they can deliver, especially for the poor and elderly and minorities and uneducated, illiterate, and the uninformed, and those on low incomes. What do you think?
Can I share a secret with you?
Sure.
My children, who are teenagers, they use cash and they love cash. And there's a backstory to it. So a couple of years ago, when we were in Hong Kong, we got them NFC watches with Octopus. And it was so easy, right? You go in 7-Eleven, you go, I don't know, you go to any store, you basically touch and pay, and off you go. They love the convenience of it. Now, remember that this was a few years ago. So this was, I think they were like about 10 and 7, maybe, perhaps. That was right before COVID. And they loved it. They came back to the US. They're like, wait, how come we can't have NFC watches that we just, tap and go? It was so easy. It was so convenient. And I showed them how much money they ended up using in Hong Kong. And I said, you know what? Let's do an experiment. Okay. Next time we go to the mall here, I'll give you cash. You put that cash in your wallet and you're going to pay with that cash. And you know what I observed on both children?
There were more cards spending when they use cash.
They pause, they think, and they ended up not buying. Absolutely correct. And I observed it time and time again until now. Even they're 12 and 14, and they're still like that, and they stick to cash. My daughter actually said, "Mommy, I'm gonna stick to cash because I know when my wallet is empty, I know that I'm done with my allowance." Right. So I think observing their habits, it reminds me of something a friend of mine told me. It was like a TikTok movement where the Gen Zs are using cash envelopes again, just like, how our grandparents used to do. They take out, so much cash and they put them in different envelopes that, they use for allocation for different categories of things, eating out, shopping, etc. And when it's done, it's done. They won't overspend. I use that example a lot because I think it is really easy to do a broad stroke and say, well, this particular generation behaves this way and this particular generation behaves this way. I think there's a lot of nuance underneath that. And to answer your question, no, I do not believe that letting a certain generation age out, quote unquote, will change the habits. I think the reason why the Gen Zs behaved a certain way, or looking at my children, the way they behaved, they did, is because the digital tools are not giving them the governance or the controls, if you will, lack of better words, to act a certain way that they need to be financially responsible. So until we can figure out how we can really use the tools to be helpful for consumers instead of leaning in towards the buy now, pay later. Hey, we don't have to worry about paying now. We can pay in full. Look at how easy it is. Until we can solve that, I think, I think we have a lot of work to do.
It's astonishing to hear that Gen Z, some anecdotal, but in some cases, despite being the most tech savvy generation,
Right?
uh,
It has nothing to do with whether or
that
not they are,
that
connected or not.
they're inclined to use cash. And again, yeah,
Yeah.
motivations and intentions differ, and some old people have grudgingly, come to understand how to use digital payment services. So I guess it also comes down to the individual, how much they they want to learn. I mean, I think certainly in the U.S., between 50 to 60 million people don't have access to formal banking and financial services. So the issue of fairer access has long been an issue with the IMF and the Basel Committee in terms of their pronouncements. Um, I guess if we turn to AI and its implications for digital inclusion, everyone's talking about generative AI and machine learning. Can AI facilitate digital inclusion in Asia and the West, and perhaps even in parts of Africa?
I think it can facilitate certain kind of inclusion, right? As with everything, I always call it there is a duality. There's a pro and there's a con. So AI has been around, right? As you know, it's been around a long time before the whole generative AI buzz and the hype that came with ChatGPT 2 years ago. Back then, most of the application of AI has been around the back end, right? So we don't really see and hear much about it, but it's been doing a lot of interesting things. The difference with generative AI now is more front and center. It's things that everyday consumers have access to. They can play with it. They can see what happens to it. There has been a lot of reports that came out and measure the effectiveness of certain Gen AI tools, for example, to improve productivity. That was actually a really, really good study that was released a couple of weeks ago that talked about how a lot of the Gen AI coding tools have helped junior developers way more than the senior ones. And so if that is in case, if it is indeed true, I think that will help more people use the tools, gain more access to it, be more comfortable with it, probably benefit from it more so than other technologies. But again, I think it's predicated towards to be able to use those tools, you need to have A, internet access. B, you need to know how to use it. It needs to be affordable. So again, it goes back to if, right, it's a big if. It's no different than, we talked about metaverse and all of these things. The base requirement is you need to have affordable internet access. So you need to be able to use it. If that all holds true, then yes, I do think that Gen AI is going to be really interesting in facilitating inclusion of different sorts. I think what beyond the coding and efficiency improvement, I think what actually gets me more excited is I'm seeing more institutions trying to use the technology to improve some of the processes that they have that impact the small business owners, for example. So in the US, there are some smaller banks that are testing and using the Gen AI bots and putting them on the front end for small business owners when they come in and look for, trying to apply for small business loans. And SMB loans in the US is a very, very, very complicated process. And it, takes time. And a lot of banks don't want to do it just because it's complex and the ROI is not there. And so if we are able to create a framework where more banks are able to use the Gen AI bots to help small business owners get all the documents, get everything pre-qual, basically have a loan file ready for the banker to come in the next day and do the final stamp, if you will, that will reduce the time it takes for the loan application, that will improve the credit access for small business owners, which, as you know, is crucial for many of our economies. It's like over 99% of the economy is based on small business owners. So those are things that I would love to see more that, can actually hit a bottom line and make positive impact.
What liability issues do you see surrounding the use of AI in banking and financial services? Because at the end of the day, it comes down to accountability. Who's left holding the bag? Who will be responsible? Does that concern you at all, or do the benefits and the efficiencies outweigh any such concerns, and we should plow on?
Oh God, no! There's alarm bells everywhere. Disclaimer: I spent 20 years in
Always,
tech,
always,
right?
everything in life is a double-edged sword, you know?
It is a double-edged sword, but I think I would love to believe that the benefit will outweigh the risks if we are intentional about recognizing that there are risks and we're intentional about solving it, right? It all comes down to intention drives outcomes. Dude, I repeat that every single day. But it is true, right? So where is your starting point? What are you trying to do? Who are you trying to benefit? And who is it for? Who are you designing for and who's at the table? It goes back to what are you trying to do? What problem are you trying to solve, right? So last year, for example, is not a banking example, but it is an example that I think we need to heed. Um, an airline in Canada, they put a chatbot right on their website, and unfortunately, that's a Gen AI chatbot that just gave all sorts of wrong answer, including a wrong answer to someone who was looking for a flight for bereavement, and it gave that person a wrong information to the extent that there was, financial loss because when the person completed travel, he was trying to come back late, trying to figure out, wait, the cost is not matching to what the bot told me. And the airline said, oops, that was the bot talking, it's not us. Well, they got sued. And guess what? The passenger won, right? So that was one small example, but an important example of when we put technology in the front end to interact with consumers, we need to know what the bot is going to do. What is the outcome? We need to keep human in the loop, so to speak. So that's one big thing, and we're starting to see different financial institutions finding ways around it. For example, they use Gen AI technology in the front end to understand the question, but when it comes back to giving the answer, everything is checked and double checked. So that's another way to go around it. The other liability issue that we might see is credit decisioning, right? We see more and more companies wanting to use AI to extend credit to those perhaps that before they didn't have credit or extend it in a different way. I think one of the best example I love is what some of the big tech firms in Asia do, right? The 310 with the micro lending. We don't quite have that in the US, but there are institutions that are using AI to do credit decisioning. And essentially, what the regulatory bodies come back to say, and you need to be able to prove out if we ask you, how can you prove that? How you come to that conclusion, you need to be able to explain it. So explainability is super important. I'll give you an example that a good friend of mine shared with me recently, and I love that example. So she said, you think of AI, you think of creating the different data models as raising a baby tiger, right? You have a bunch of cute little baby tigers, you have a bunch of little models is running, is giving you the answers that you want. You're very happy. It's awesome. It serves a very small purpose and it works. The problem is when we have those little baby tigers, we don't think, we don't pause and think what's going to happen when the baby tiger grows up, right? We don't think about what is the baby tiger going to be feeding on, where the food is coming from, who's going to take care of the tiger when it gets older, and what's going to happen when the tiger eats us. So we don't think long term enough to figure out this little cute, models that we're building for a certain purpose. As it keeps growing, where is that data coming from? Who owns that data? Do we know what the model is doing? Can we explain what the model is doing? And when it gets to a certain point, do we know if it's accurate? So that was Noel's trying to explain to people that's why we need to be careful with what we're doing. Because we need to look at the long term. And so that is my long about way of answering. Yes, there are definitely liability issues that we need to be careful of. And we certainly see that.
Well, I mean, for me, coming at it as a financial law and regulatory journalist, I mean, it puzzled me initially because I was thinking, okay, if things go awry with AI, where would liability rest? Would it be with the users? I mean, the institution, or would it be the clients? I mean, would it be those that were commissioned to write the algorithm? I mean, I mean, and what I found was, the answer is more complex. That it really depends on the situation. So, for example, a doctor using AI to support decision making would clearly be responsible. But if the tools did not function appropriately, then probably that's a case against the designer, similar to existing medical or professional situations. Now, if you're talking fully independent AI, then I guess the Tornado Cash case is informative in that the designers were criminally prosecuted. But I guess this just goes to underscore the complexity that arises with self-learning and the potential for agents to create new agents. Now, from our friend Rashir, I believe, pointed out that the one way to look at it is how regulators treat algorithmic trading errors. So if you look at the case of Knight Capital, that typically liability lies with the financial institution deploying the AI, and they're expected to ensure that they've tested it appropriately before deployment. Locally, in Hong Kong, the Securities and Futures Commission updated the responsible officers regime to also include the manager in charge regime, and this extended to the head of IT or electronic trading, where such heads have the responsibility for programs deployed by their teams. And again, liability can lie with how it is deployed, the intentions of the end user. So, yeah, really, I mean, you're talking joint and several liability or joint enterprise liability, as would be the case in criminal law.
It is complex, right?
Yeah, very, very much so. And so yeah, it's the typical law professor answer. It depends.
Depends.
Yeah, it depends.
I think this is going to be an amazing time to be a lawyer. Imagine all of the cases that you need to figure out where
There's
it
too much.
goes.
There's too much because lawyers thrive in the gray area. They thrive. They thrive in
Mhm.
murkiness, and that's where there are not as many bright line rules, or a twist of the facts can put you in a very different universe where different rules apply.
Mhm.
Yeah, that uncertainty is grist for their mill. That their the lawyer's business model thrives on that sort of thing. But again, if we take a step back and look at it from 30,000 feet, I mean, does AI need to be regulated? Because You know the Silicon Valley crowd are going to be saying, no, the industry should be given free rein to create and innovate, because some do fear that regulation will crush the future beneficial developments of AI. Uh, but I mean, again, you given your long perspective, what are your impressions?
I think it definitely needs to be regulated. How and to what extent is the question, right? Always devil in the details. So if you look at, for example, the EU, they have the EU AI Act that goes way deeper than probably any other jurisdiction that I know. And some will say, well, look at what they're doing, and that's why innovation is more stifled in the EU compared to the rest of the world, right? They're constantly.
But the EU is taking the position that no, AI will not be allowed to take on a life of its own, and they have
Hmm.
some compelling reasons for that.
Yep, I think so. And I actually applaud them with it. So just you don't have to look too far for an example. Look at the recent LinkedIn issue, right? Where they came out and say, oh, by the way, we have already ingested all of your data to train our model. But if you want to opt out in the future, here's a way to opt out. And they only do that to the US users. They don't dare touch the EU because EU already have regulations in place for user data privacy. So I think, that is one very small example of looking at the repercussions of regulation, right? My data is absolutely not protected because even if I check now and say, LinkedIn, yep, do not use my data, guess what? Everything else that had existed from this point before was already baked into the model and you can't take it out. You can't just, oh, let's subtract Theo's data from this model and retrain it. It doesn't work that way. So I think there needs to be regulation to protect consumers.
That's the troubling thing, right? That the legacy data that's gone, that's unprotected. Yeah.
Exactly. And we are in the situation we are because the US has no regulation around that or hodgepodge of regulations, right? We have 50 states. Different states have a different law with regards to data privacy. And you look at, for example, California, who recently, they vetoed the regulation that, they want to put in place because it got watered down so much by the influence of the industry that it just is useless, right? Becomes
Yeah,
a toothless tiger.
they don't want to they don't want to do laws that have retroactive effect, because that undermines the whole industry. I mean,
Yeah. But here's the thing though, right? The challenge is if this technology that can do quite a few things in addition, including, for example, making decisions for us, when this technology gets more and more embedded into financial services, which is a highly regulated industry that can impact people's money, is no longer about, oh, when I draw a cute picture, what's going to happen to that picture? Or, oh, can I create a podcast based on my, article, which Google did with Notebook recently? It's no longer those. It's things that have a much heftier repercussions. And so when you have these two universes collide, the only responsible thing to do is to make sure that we don't end up colliding with, I don't know, something that will break us, right? I mean, it almost sounds like a logical choice and too logical a choice. I like, for example, sometimes I look at Australia. Australia actually has a pretty interesting set of guidance. I don't think they've put them into regulations yet, but they have a really interesting risk framework that they have built for financial services industry. And it basically has a bunch of different checklists and questions about what are the risks and what would happen and what questions we should think about. It's a sensible thing to do. Um, being responsible, being all of that, that's what financial services industry is based on, right? It's based on trust. You need to trust that when I put the money in the institution that is still going to be there. I need to trust that when you tell me something that's a trustworthy advice that you give me. it's you can't just randomly, I don't know, break it. It might just be an easy, like a naive thing to say, but I do think that we need to put a little bit of reps around it.
The industry, and let me clarify about what I mean by the industry. Okay, to some extent, I'm referring to the financial world, but more so to the tech world. The Silicon Valley people, they would say that financial regulators are ignorant of technologies such as AI. And so, okay, there's some truth to that because most regulators don't come from STEM backgrounds. They're not techies. Many of them are former lawyers and accountants and people who are in the markets. So, acknowledging that there's some truth to that, would the solution be for more engineers and coders to become regulators?
I think that is an interesting question that extends far beyond. If we take a step back,
Because it's a it's a difference of outlook because engineers like creating problem solving systems that engender certain outcomes. Whereas I don't necessarily think that lawyers and accountants necessarily think along those lines. It's a different perspective. It's a different viewpoint. But as we're seeing, the regulation of financial technology is an interdisciplinary endeavor.
that is the key word, is interdisciplinary. I think the challenge that we see is multifold. Yes, we need more industry people that can work closely with the regulators. And there are some fairly open-minded regulators that have open doors and they love to talk. I think we also need to get people in Silicon Valley, the tech people, a little bit more understanding and appreciation for what is regulation, why is industry regulated, right? You look at some of the challenges that some of the fintechs have, for example, Evolve Bank, right, in the US, um, is I would say not everyone who is providing a technology solution has an appreciation for it. You actually need to know what you are doing and what you might do to break the law. Um, Risks is a huge thing, right? Understanding risk, knowing how to manage risk is a big thing. You need to start from that instead of just let's throw stuff on the wall and see what sticks. That might not really work all the time. But I think we have another bigger problem is I think in general we have a talent issue. And it if we look at the people that business is looking for that they're hiring, right? The big techs of the world, the Googles of the world, versus the people that the startups are looking for, versus the people that the government needs to become effective regulators, versus the people that academia needs to teach the next generation how to become, AI ready. All of these entities need the same people, and we don't have enough people, right? So I think if we dig deeper, what we are lacking is we are lacking cross-pollination, and we're lacking pathways to bring more people into the ecosystem that can have appreciation for different sides of the viewpoint. And that is one big problem I'm seeing more and more in here. Is so you see like hodgepodge of initiatives, right? Like JP Morgan working with CUNY and trying to, find talents and do apprentices, right, to bring them into the bank and work and, get them up to speed and learn AI and all of that to bring them into the fold. You see, different companies competing for talent. I think one of the more famous one recently is one of the big tech firms that paid more than $1 billion in acquiring an AI startup because they wanted that one person back in Google. So that was interesting. So I think we need to solve that, as well as solving the having more tech people in regulation and having some regulators working in tech. It's multifold.
If we take a look back at the recent past, and this is a non-AI question, but financial regulators and central banks writ large have been more proactive despite geopolitical issues to create linkages for seamless cross-border transactions and transfers. So they now see the value of interconnectivity. Is that a good thing, or would you urge caution?
I think it's a good thing. No, we don't exist on an island. We definitely don't exist on a silo. I think we like to think of ourselves as being independent, as being able to do a lot of things on our own. But I think the reality is we are actually way more connected than we ever were. We rely on each other industries. We rely on money movement across borders. We rely on commerce across borders way more than we're willing to acknowledge. And I think I wanted to fundamentally say that I think people deep down knows that whether or not they will fully admit to it because of their political posture, that's a whole different story.
Well, certainly there are many initiatives going on across the region. So yeah, this region, APAC, is fertile for such ideas and such projects. I mean, you got Project Nexus, the BIS Innovation Hub, the Monetary Authority of Singapore, all building towards unified payment systems for fast and efficient transfers across Southeast Asia, plus with the extension of South Asia. Again, as I think even Bashir has pointed out, it used to be silos driven by private organizations, and now regulators see the value of interconnectivity. So that's a threshold that's been crossed. The meeting of the minds between the two. Um, you're a prolific writer, having authored two books already, and I urge our listeners to check both of them out if you want to come up to speed on the subject. But can you give us a sense of coming attractions? What are you working on now?
I'm working on my third book.
Okay, same field.
Well, it's still going to be financial services, right? That's where I'm anchored, but it's going to be
Tech overtone.
is tech overtone. Yes. Yes, always. I want to bring my two ecosystems together. I feel like we're not talking to each other enough. That's why I laughed when you were asking the question about regulator and tech and all of that. I feel like a lot of us are very happy working in our silo because it's easier to stay where we are than to try to look outside. So one of the things I often urge people, like my colleagues in the US, is say, please look east for innovation. Please look south for ideas. LATAM and Asia, a lot of things going on, and there are a lot of things that we can learn. Same within our ecosystem. I don't think that we have enough of an appreciation of what each other industries are doing. We do impact each other and we do are connected way more than, we think we are, right? Banks need tech and tech needs the banks, and fintech and banks need to work together. I think we've done enough of the fintech's going to eat the banker's lunch. We all know that that's not true. We need each other, really do. So now we need to find a way to work together and to create a better future. That's the next endeavor.
We've covered a lot of ground. Is there anything you felt we didn't discuss, or anything you'd like to leave our audience with?
Oh, I think the future is interesting. It's bright. No, it's funny because if there's one takeaway, right? Because we did talk a lot. Wow, we did. This was probably one of the longest recording I've done. Um, if there's one takeaway from our conversation, is that I hope that we will be willing to take our guard down and look outside of our world to see how others are doing things. Because I can guarantee you there's something that they're doing that's interesting that we don't know that we can learn from. Right. I'll give you a quick example. This was, maybe 8 years ago, more than, when I visited Hongju and I came back to the US. I was like, wow, this is really fascinating. I see how they're living. I see the whole cashless, everything is on the app. I got yelled at by a cab driver. I had absolutely no idea what he said because I don't speak Mandarin. But he was yelling at me. He was very upset with me. And then it wasn't until later my friend, who's French, but he speaks Chinese. And he told me, he said, well, he was upset because you're giving him cash and you're not using the app. I'm like, dude, I can't use the app because it doesn't take an American card. And so I came back and I told that story to quite a few people. And the response I got back was, so who cares? Who cares they're paying in QR code? Who cares? We have our cards. And that was a fascinating response because I thought, people were like, wow, this is pretty cool. What can we do? Like, how can we do something similar? Right. And the interesting thing was the QR code was interesting, but that wasn't the interesting thing. What was interesting was how a big technology company is able to bring all of these functions into an app to be able to get the data to understand the consumer so well that it can offer additional services, right? It's the long tail of it. That was the interesting part, is the ecosystem part of banking services and financial services. That was fascinating. And so I remember that. And I remember that example, I remember those conversations because it's a reminder for us that no matter how often we like to think that we are ahead of the game for some of the pots, there are always innovators, always some of the companies doing something really, really interesting that we really need to learn from. So that was my takeaway.
The bright new world, as you say, and there's a lot to learn from people in other jurisdictions. Increasingly, I mean, you're going to see more young people either by choice or by necessity, vocation, because that's the arena that the job's going to be in, either fintech or other fields pertaining to advanced technologies. That's where they're going to end up making their livelihood. They're going to earn their living in that space or something closely affiliated to it. What advice would you offer them for this brave new world of countless opportunities? We don't know what directions these technologies may yet go in, and what industries they may create in their own right.
A lot of the jobs in the future have not been created yet, right? That's not the surprising thing. A lot of things that we know today is going to change. That's also not surprising.
So learn how to learn.
To learn how to learn, to be open-minded. I would say to be open-minded, critical thinking skills, that's always needed. Machines are going to do a lot of things. They're going to do a lot of things more efficiently. Now, the narrative out on the street is, hey, the machine is going to do a lot of things so that it can free up your time so you can do other things. Well, I'm not sure I completely buy that. I think in the future, there will be a lot of entry-level jobs that will be replaced. The on-ramp to an industry will drastically change, right? We don't need as many, analysts reading documents anymore because machines can do that and spit out a summary way faster than a human can. So focus on things that a machine cannot do. You can't compete with machines on speed. Machines can't, right? We need to sleep, we need to rest, we need a break. But do things that a machine cannot do. A machine cannot think as much as we like to say they do. It doesn't think, right? So do things that will require thinking, do things that will require empathy, do things that will require you to have an open mind to shift around. I think the one thing I do appreciate about education, and I hope that continues, is that kids nowadays, they seem to be more well-rounded than how I was brought up. Because when I was brought up in the education system I was in, it was very, very much like 99% tilted towards STEM. I often tell people I was brought up in my school. It was physics, chemistry, biology, mathematics, calculus, pure math, and French. I had no history class. I had no geography class. I love to read just because my dad loves to read. I code because my dad taught me the first line of code. A lot of things was my family. And so if I were to just rely on school, and I ended up doing a lot of that, I am very much a 1 and 0 person. And kids nowadays, I see a lot more of them. They love to read, they love to do different things. And I think we need to preserve that. We need to create different on-ramps for kids to learn and to be more well-rounded, to solve problems and look at problems in different ways. Because that's the only way that we can figure out what the future will be. Because as you say, we don't know how it is going to be. So we need to adapt.
A superb note to end it on. Theodora Lau, thank you so much for your time.
Thank you so much for having me. Appreciate the conversation.
And to our listeners, thank you for joining us. Until next time.